So the common question I keep getting is the real estate market going to crash? Is it really this doom and gloom? Well, I'm not a mind reader. However, there are some data points that we can take a look at. Let's take a look. So foreclosures are well below where they were pre-pandemic. Back in 2008, foreclosures were everywhere. And the guidelines to get a loan, it was much easier to get a loan. Now where we are, foreclosures are 28% below where we were in 2019 pre-pandemic. Mortgage lending standards are far stricter than they were in the early 2000s. In the early 2000s, there was something called no document loans, no verification of income. The loans today are far stricter. There's verification of everything, and they are far less risky. Homeowners today have far greater equity than they did in 2008. In 2008, people were putting far less down on their down payments, and they were also taking out home equity line of credit. And so when it came time to sell, they just didn't have any equity to show. Today, we're at all-time highs in equity. So what does this mean? The market might shift a little bit, might not be as much of a seller demand, although in our Montgomery County and our DC metro area, where inventory is very, very low, if it continues, we'll probably see what we've been seeing for a while now. And if it doesn't continue, well, we might not see as high of a demand. We might see some markets flat out a little bit, but we're in a much better position than we were in 2008. People are sitting on a ton of equity. Anyway, if you have any questions, please reach out. Thanks so much for tuning in.